Mixed North American markets today, coming back from the red a little bit. Oil, though, down to the $55 range, a far cry from where it started the year at $80. Let's get more from Paul Harris, portfolio manager at Harris Douglas Asset Management. Paul, West Texas Intermediate crude, what's driving it down, and do you see that changing at all?
Well, I mean, I think there's been sort of this whole overcapacity, right? So you've seen a lot of overcapacity in the oil business, and you've seen OPEC come out and increase capacity or keep it where they, at an increased level and keep it there. So I think you've seen a lot of sort of in the United States on the shale side, you've seen a lot of stuff from OPEC. And so that's created a vast majority of the overcapacity we're seeing. And I don't think you get through that over the next, couple of months at least. So I think that's the difficult part. So I think crude can probably stay at lower levels. Saying all that, do you want to own the companies, which is what I think about. And I think that at certain, especially in Canada, these stocks aren't trading at, they're trading at 14 times earnings. They're trading at almost a 5% dividend yield. They continue to, and I'm talking about the bigger cap stocks like Suncor and CNQ. And those are the things I think in a market like this, when oil's kind of going down like this, you need to own those kind of companies because, one, they have the capacity to manage through this kind of process. The other thing is that they also have the capacity, if it happens, they're actually very good at kind of making acquisitions if they need to, when oil falls and they get an opportunity to buy a company that's maybe in distress because of the lower oil price. So I think that it's good for these bigger companies. I think they're in a better situation with lower oil prices. Saying all that, I think that, oil at some point in time settles at a kind of level and then will go up from there. But I think right now they have to get through this period where they have so much overcapacity in the oil market.
Okay, let's talk also about the Teck Resources deal with Anglo-American. Are you surprised at how quickly Ottawa seems to have approved it here? And what did you think of the deal?
Well, I am surprised because, the minister kept on going on about saying she wants more concessions and all these other things. And all of a sudden, I think most analysts were taken aback that they approved it so quickly. As the individual brought up, it has to be approved by other places. But I think that's much more. I think it's much more minor because Canada, Canada's approving it was the most important thing. I think the deal makes a lot of sense. Both companies were looked at as takeovers over periods of time. Anglo through BHP, Teck with Glencore. So I think putting them together gives them much larger capacity. I think the bigger issue is what they promised, the $10 billion over 15 years. Not keeping the head office here. What does that actually mean? In the case of the gentleman brought up about Barrick, doesn't mean very much, right? So I think those are the issues that face Canada when they allow something like this to happen, whether there is some transparency and accountability to the issues that they promised. But I think putting them together makes a lot of sense. They're a bigger company. I think resources, especially on the you're talking about, certain kinds of minerals have become very, very important, not only to the tech world, but for national security. And I think they have the capacity to really grow certain kinds of businesses, especially copper. So I think that's really important. I think it's a good deal. There is some synergies. Mining deals really don't have a lot of synergies, but there are some, not outside of head office and stuff like that, but I think there are some synergies given where their mines are, which is very helpful, I think, in the mining industry. So I think it's a good deal overall. I think that let's hope that they stick to what they said and continue to run the business in a, thinking about the Canadian operations and the Canada as a whole when they think about these resources, as opposed to just saying a lot of things to get the deal done and then sort of slowly hollow out a lot of these things.
Yeah, follow through on the commitments they're making. All right, we've touched on oil, we've touched on mining. Are any of these sectors ones that you favor right now?
We're not a big fan of mining as a general rule because I think it's all really based on the commodity, and I think they've had a really big run, so it's not something that I invest in. So that's one thing. I do invest in oil. We own CNQ, we own Suncor, so I think that oil, once these, like I said, I like these larger cap companies. I think what we need to do is, when oil settles down, these companies will be able to take advantage of kind of lower oil prices if they want to buy something, but also they have the balance sheet and the capacity to continue to, they do get a lot of cash flow. They've done a smart thing, I think, a lot of these larger companies where they've bought back their shares, brought down their debt levels, and increased their dividends. So they're in a lot better shape than they were many, many years ago. And I think they've kind of got religion with respect to how to run a business effectively on the oil side. So I think these are the companies I would want to own. But I do think that, there's a chance that you can, if you see a good opportunity at these prices for them to buy something, that would be great. The oil, I think, is fine. I don't invest in gold or any mining companies. I have not for a thing, but I do like technology still. I think there's a lot of room for something like Adobe to do well. I do like healthcare. I like financials in Canada and the United States. I think financials are going to continue to do well. There's a lot of, I think, changes in regulations coming down the pipe on the U.S. side, which will help Canadian banks. I think the low interest rate environment is helping Canadian banks and U.S. banks. So I think there's a lot of opportunity in financials. I think there's a real opportunity in U.S. regional financials as well, simply because there's way too many banks in the United States. We constantly go on about how many banks we have, such 6 banks and all that stuff. But in the United States, they have 4,000. So there's lots of room for them to consolidate. I think the government wants them to consolidate and become bigger. And so I think there's lots of room there on the U.S. side. And I think banking is a large technology business. You really need to be big in banking to be successful, I think, going forward. So I think there's an opportunity on the retail side there. But U.S. and Canadian banks, I think, and generally financials, I think will do well over the next going into 2026.
All right, Paul, I got to leave it there. I'm out of time with you, sir, but thanks for your time. Appreciate it.